Hey guys, this is Tom here with Victory Trading. Welcome along to another trading video. And in this video I'm going to show you another strategy that I use in the foreign exchange markets to look for entries and take advantage of short-term trends or take advantage of the current price momentum to the upside or the downside. Okay, so I look at this kind of like jumping on a wave that's already going in a certain direction. You just jump on and it takes you hopefully to shore, to safety, that being profits. Okay, so I'll talk you through it briefly here and give you a look at one or two previous examples, and hopefully this setup that I'm looking at now, hopefully it pans out as expected. So you can see on the charts, I'm looking at the US dollar Swiss franc 15-minute chart at the moment, which is what I use. And I've also got three moving averages here on the screen. This is a 75 period simple moving average, the blue line. The green line is a 50 period simple moving average. And the red line is an 8 period exponential moving average. They're just the three moving averages I use. You may tweak this yourself. You may find it works better with other periods or other types of moving averages, maybe a linear weighted moving average, or you may have all exponential moving averages. This is just what works for me and what I enjoy. Okay, so the other thing I have on the charts is this indicator down below, which is called the Bill Williams Accelerator Oscillator. Okay, and what this does is basically gives us an idea of acceleration in a certain direction. So acceleration to the upside, of course buying, or acceleration to the downside, selling. Okay, so I'll just talk you through it very briefly. The zero level, that being the line in the middle that the red and green bars are oscillating above or below. It's actually where the crosshair is right now. That's the zero level. That would be a neutral state of buying or selling. So it's not really, it's nowhere really. It's in between. It's in there's no momentum to the upside or the downside when it's at the zero level. So you can see it naturally oscillates above or below, as you can see clearly on the chart here on the indicator itself. Okay, so we'll look at have a look at this little area here. You can see there are green and red lines. Okay, so the green lines, of course, above the zero level, this will signal momentum or acceleration or an increase in buying. Increase in buying, the green lines above the zero. Okay, you may see the red lines next to it and think, okay, that signals selling. It does and it doesn't. It actually signals that the buying is slowing down. When it's above the zero, it means the buying is slowing down. It doesn't necessarily mean that we've officially entered into a state of selling. It just means the buying is slowing down at the moment until it passes the zero level, at which point the red bars below the zero level will signal acceleration to the downside or selling. Okay, and then lastly, the green bars below the zero level, these do not signal that the buying has started again necessarily. It just signals that the selling is slowing down. That's what it signals. Okay, so again, very quickly, green lines above the zero, acceleration to the upside. Red lines above the zero, slowing down of that acceleration. Okay, red lines below the zero, acceleration to the downside. Green lines below the zero, slowing down of that acceleration. So you can think of it like your foot on the gas in a car. The green lines above the zero, you're in drive, your foot's to the floor. The red lines to the zero, you're applying the brakes. So you're still moving, but you're just slowing down. And then below the zero, the red lines, you're in the reverse gear, foot to the floor. And then the green lines, you're applying the brakes. Still moving backwards, just slowing down. That's all. Okay, so that's the oscillator that I use for this particular strategy. That's how it works. And what I'm looking for here is, as I said, we have our three moving averages here. They're stacked to the upside until recently. So we're in an uptrend here. We've got the 70, the 50, and the 8 all stacked to the upside, uptrend. And now the 8 EMA, which is the red line, has taken a retracement down below the other two MAs. Okay, so the retracement, sometimes you'll get a retracement maybe down towards the green, such as here. I'm not really too interested in that. I will be keeping an eye on it, but I'm not really too interested in it. When the price passes the blue line, which is the 75, that's when I'm having a look now. The kettle's on, okay? So we've had a pullback to the downside past the other two MAs, and the price is now below the two, okay? So what I'm looking for now is basically a resumption to the upside. I want the buying to kick in again and the uptrend to continue. And that's what this strategy is all about. It's about just jumping on the wave that's already in motion, jumping on at a good position and letting the wave take you to shore, and hopefully to profits as well. Okay, I'm going to give you a quick example now in a moment on the chart itself. I'll scroll to the left and I'll show you exactly what I mean. But what I'm keeping an eye out for here now, as I said, the first thing I'm waiting for is the MAs to stack upside or downside, which has happened. The second thing I'm looking for is the price to retrace back over the other two MAs. The red line to cross the other two, which will generally coincide with the accelerator being below the zero here, as you can see where it is now. So now what I'm looking for is a couple of bullish candles, or basically a turnaround of some sort for the uptrend to continue, and I will use the accelerator crossing the zero with green bars. So I'm looking for at least one green bar over the zero level before I think about pulling the trigger and getting in with a buy trade. It is discretionary. You will need to make your own decisions. Sometimes I'll wait for the second green bar depending on the setup and depending on the current situation. So it's not a case that once you see any green bar you jump in with a buy. You still need to make your own decisions, but it can certainly help you to point you in the right direction and get you in a better position beforehand. Okay, so that's what I'm looking for now. Just thought I'd talk you through it, hopefully before it pans out. Hopefully it does, and we can get a good example in. So I'll just show you what I mean exactly. So I'll scroll to the left here, and you can see exactly here what I'm talking about. There's actually two examples on the chart right now. Here's one. Okay, we crossed the blue line to the downside, and then the buying resumed. The accelerator crossed back over here. So we would have been taking this buy trade around this area here. Okay, again, it is discretionary. You have to make the decision yourself. But you could have taken this buy trade here at 92.26. You can see where the price is now. It's now at 92.55. So that would be a nice 30 odd pips if you were still in the trade now. Okay, let's look over here to the left again. You can see another example. Price took a dip below the MAs here. Okay, down below the MAs. The red EMA came below the other two simple MAs, and then it resumed to the upside. We had a cross of the zero level on the indicator, and we would have entered somewhere around here. Again, discretionary. I'm not going to pinpoint it and say we got in here, we got out there. It's discretionary. It's up to you. You need to make your own decisions as well. But you can see where the price was at that time, 92.02, around the round figure of 92-ish. So again, you could have got out there at a 30 pips, 20 pips kind of thing, or you could have stayed in if you're that kind of trader. I like to get out quickly, to be honest. That's my own style. I get out or get in and out quickly and as safely as possible. But if you like to get in and try and ride the wave for as long as possible, this is a good way to do so. So that's what we're waiting for here now, is something similar to happen on this chart at the moment. So you can see it's still dipping below the MA at the moment, the 75 MA. Price is still below the blue line. So we're going to keep an eye on it now, and hopefully it pans out over the next few candles or the next few hours. So we're looking for a curl back upwards and a cross of the zero level here. And then we'll look at getting an entry from that point. Okay guys, so check back soon and we'll see how it goes. Okay guys, you can see on the charts now where the price is currently sitting. It has passed the MA again, the 75 and the 50 actually, back to the upside. Okay, not exactly a requirement for the strategy, but it has curled back upwards and it seems to be heading back up in the upside direction. Okay, so you can also see on the lower part of the screen that the momentum has switched from the downside to the upside with the Accelerator Oscillator. Okay, we have a green bar now above the zero level, and I'm going to go ahead and take a buy order based on this. Okay, again, uptrend, MA stacked to the upside, retracement, and the accelerator has crossed back over the zero. And we're going to take a buy on the basis that that momentum will hopefully continue. The uptrend will continue and we can ride that wave for, you know, anything from 10 to maybe 30, 40 pips, something like that. It depends on yourself. You can tweak this or change it whatever way you like. You can use it on different time frames, etc. But for now, I will go ahead and enter in the order. It's going to be a market order. And I'm going to put the stop loss somewhere around, maybe around here, just below the recent low. Give it a little bit of breathing room, maybe about 45 here. And I'll come back to you now in a moment with the order on the screen, okay? So now you can see on the charts on your screen that the order has been entered already. So we're in a buy trade, 0.2 lots. On the basis that the uptrend is going to continue. We've used the MAs and the accelerator oscillator to make the decision to get into the trade, and hopefully the tide or the wave continues to the upside and we can get a few pips out of it. So I've put the stop loss in is, as I said, a little bit of breathing room below a recent low. In this case it's about 20 pips, and then I've put the take profit target up at the next round figure in this case. So again, it's discretionary. You'll need to tweak it a little bit yourself, make your own decisions depending on the setup, on the pair, on the day, or on other things too. You may need to check the higher time frames for your key levels and, you know, upcoming news, things like that. So always be careful, always do your due diligence. But for now, we'll keep an eye on this and see how it goes. Okay, so we're in the trade now, buy trade, and we're looking for upside momentum to continue. Okay, so check back soon, guys. Okay, guys, you can see what has happened since our entry a couple of candles ago. You can see where the accelerator is at the moment, well and truly above the zero. Plenty of green bars. We've had let me see, 4 green bars altogether over the zero level, and we're approximately 11 pips in profit at the moment, 11 or 12 pips. Okay, again, as I said, this is discretionary. You can use it whatever way you like. What I'm going to do now, partly for demonstration purposes, but it's also a good way to trade the strategy. I'm actually going to close out half of the trade, and I'm going to move the stop upwards to the break-even point, thereby putting us into a completely risk-free trade with 10 or 11 pips profit booked already. So you can see over here, I'm not sure if you can see exactly because the candles are kind of in the way. This is a buy 0.2. Let me see if I can move that out of the way. Yeah, there you go. Okay, buy 0.2. So when I come back in a second, it will be buy 0.1 because I'm now going to close out half of the trade. So just bear with me for one moment. So now you can see, guys, that number has changed from buy 0.2 to buy 0.1 because I've closed out half of the trade. Okay, and I've also moved the stop loss up to above the entry point. So we're now in a completely risk-free trade. Even if it takes a turn back down, we'll be stopped out before it becomes a loss. We've booked 10 pips profit already, and now we can basically ride the wave and see how far it takes us. Now you could put a trailing stop loss on this if you wanted to. I trade on the mobile app, the MT5 mobile app, so I actually don't have the option of using a trailing stop on the app, unfortunately. But I don't really like them anyway, to be honest, so I'm not really too upset about that. But you could easily put a trailer on this and let it ride up and see how far the wave takes you. So what I'm going to be doing from here on out is monitoring the indicator down here. You can see we've got 4 green bars at the moment. Once we start getting red bars, as I said, that will indicate the slowing down of the buying or the upward momentum. So I'll be keeping an eye on it. As I said, it's risk-free from now on, so I'm not too worried about it. But we'll keep an eye on it, and once it starts to slow down, I'll look at maybe getting out altogether. Again, you could close half of what's there now. You could close 0.05 and keep the rest open to see what happens. It's up to yourself. But it's a good example of how you can trade this strategy. You can get in and get into a profit zone, and then get out and get out with partial profits and get risk-free if you want, or you can let it ride. So we'll keep an eye on it throughout the next few hours and see what happens. Okay guys, you can see where the price is currently sitting at the moment. It's about 10 or 12 pips into the trade at the moment in the profits. Half of it was closed already, as you know, and the risk is now 0. Okay, it's a risk-free trade, which is great, which is ideal. It's the closest you can get to any kind of holy grail, is controlling your risk and reducing it. So as you can see on the oscillator now down below, we have a red bar above the 0. As I mentioned earlier, what does this indicate? It indicates the buying is now slowing down. Doesn't mean it's stopped, doesn't mean the momentum to the upside has stopped altogether. It just means it's slowing down a little bit. So this is a good way to actually manage your position once you're actually in the trade. As we've done already, we moved the stop loss, and now I'm actually going to do that again. I'm actually going to move the stop loss higher to guarantee profits, basically. So if it comes back down, our stop loss will be hit on the way back down. It will still be a winning trade overall. So again, just to recap, what I'm going to do now is move the stop loss up because we have a red bar on the oscillator. Okay, so just bear with me 1 second and you'll see it in a moment on your screen. So there you go guys, you can see the stop loss has now been moved upwards, a little bit above the entry, even more so than before. So if the buying slows down to the point that it actually comes down, we'll be stopped out safely, still in profits, no loss, and it will still be an overall winning trade. Again, this is just how I like to trade it. I like to be in and out quickly, so I'm not really interested in leaving this open for a long time to kind of see if the trend continues long term. I'm not really that kind of trader. I like to be in and out quickly with a profit or a loss. Obviously, I prefer the profits, of course. So in that case, if the price turns back around and is going down to check out the moving averages again, I'll be out with my profits at that stage. So that's no problem to me. Again, you may try this on the bigger time frames. You might want to trade it a little bit differently or whatever. But this is just one way to manage it. You can use these red and green lines not only for the entry, but for the management of the trade once it's open, once the position is actually open. So the stop loss has been moved up. We're definitely going to be in a winning trade here. Well, we already are, and the risk was reduced already. So now it's actually guaranteed a bit more profits. Okay. So stay tuned, guys. We'll see how it pans out. We'll see how it goes. Okay. Okay guys, I'm going to go ahead and finish the video there. You can see we've had 2 red bars below the 0 level, which means the selling has kind of commenced here a little bit. You can see the price is taking a dip down towards the stop loss. It might even hit the stop loss as I speak here. But a good example of how you can use the indicator to get out as well as get in. Okay, so that's it in a nutshell, guys. MA is stacked to the upside or the downside, and once the accelerator crosses the zero level in your favor, in your direction, you can use that to gauge your entry. Then you can also use the indicator to move your stop loss up or partially close or fully close or whatever it may be. In this case, I'm going to go ahead and close the trade now because we are officially below the zero level with 2 red bars. Okay, so that's it for me. If you have any comments or questions or concerns of any kind, just leave a comment down below and I'll do my best to get back to you. So I hope you enjoyed the video, guys. Thanks for watching. Bye bye.